Hello, traders. You are welcome to my channel once again. Um, if you are new, please subscribe and do well to share my videos as this can help you and it can also affect uh, other people's life. All right. You never can tell who is in search of a particular materials, that we uh, take that person from one level to a professional level. All right. Without wasting much time, there's this topic I want to treat today, which I titled "Effective Entry Strategies." All right. This entry strategy is very, very effective. All right. When you apply this as you trade, you will see the result. All right. Today is 27th of August 2024. All right. These effective entry strategies in forex trading that we traders use to maximize our chances of success. All right. Like I said, the topic is effective entry strategies. All right. This is what you will need for you to be profitable. And apart from being profitable, this is what you need for you not to continue to struggle with your trading journey. All right. Number one is trend following. If you're a beginner, stick with the trend. All right. Stick with the trend. All right. It's very, very important. Trend following. That is number one. So this strategy, when we mean trend following, this strategy involves when you enter trades in the direction of the current or prevailing trend. All right. What do we mean by that? If the trend is bullish, for example, if the trend is bullish, all right, if it's bullish, you just fine tune your entry and follow suit. For example, here it was bearish. Here there was a change of character. Let me just zoom off wherever. There was a change of character for you to be ready to know that the trend is about to become bullish. All right, it was bearish before. Here there was a change of character. You see, it came down. There was a rejection, meaning that buyers are here. They push the market or they push the price up a little bit. Now, a little retracement, but it did not, it failed to take this swing low out, meaning that there is a change in trend. What now happened? There was a bullish engulfing candle. A little after that, there was a retracement. Like I told us, before you can place an entry. This is your point A, this is your point B, your point C is where you fine tune your entry. All right. Once you see a change of character and a swing high, all right, all you need to do is bring out your fib from the swing low to the swing high, then wait for price to pull up to this discount level, this discount level between 50%, 61% to 78.6%. All right. Once you see a formation of a candlestick here that signals buy, you just place your entry. It's as simple as that, guys. It's very simple. All right. You don't need to struggle with this. So you stick with the trend. All right. It's a nice strategy when anytime you open your chart and you see that this is a trend, a bullish trend. All right, or you see that the trend is about to change of character. You just look at it, and if it's a bearish trend, make sure you stay away from um, sideways market. All right, ranging market. Just follow. Go look out for trending market and follow it. So trend following. All right. This strategy involves entering trades in the direction of the prevailing trend. If it's going down, you buy. If it's going up, you if it's going down, you sell. If it's going up, you buy. So it's very simple. Traders use these tools like moving average to identify and confirm trends. All these are technical tools where you can use maybe all those moving average. When you use the moving average, anytime there is crossing, then you just know that okay, the trend is about to change. As simple as that, guy. The next one here is the breakout trending. All right, breakout trading. Anytime you see a breakout, all right, this what do you mean by breakout? Breakout, this strategy focuses on entering trade when the price breaks out of a defined support or a resistance level. Then we say breakout can signal the start of a new trend. All right. For example, let me give you guys an example. A breakout simply means, for example, let's say this price action is confined up to this point. All right, it's not doing anything. It's just go up, down within. It's confined within this support and the resistance level. It's not going anywhere. Anytime you see price push above or below this area, you just know that now the trend is about the buyers. If you push above, you know that the buyers they are ready to play. Or if you push below, you know that the sellers are ready to play. So once it's doing something like this, just sideways or consolidating, you just stay away. But by the time you see that there's a breakout from this confined space here, because this is a resistance, this is what a support level. So price is not really doing anything here, but as soon as it breaks above or below, if it's below, you short the market. But sometimes when you have to wait, when it breaks out, it will come back and retest. Then before it will give you a sign to short the market. Sometimes it breaks out, it does not come back to retest. Or it breaks above, anytime it breaks above, it will come back. You wait patiently. It will come back to retest. Then it will give you a candlestick formation. Then you buy. But sometimes it does not retest. So you just have to, the key word there is for you to enter safe. As soon as you see that there's a breakout and you check your risk reward is okay, you enter in a very safe manner. So that is how to trade as a professional. It's not that difficult, guys. So just make it very simple. All right. So another one is what we call reversal trading. All right, a reversal trading. Traders look for signs that the current trend is about to reverse. And when that happens, this can involve using candlestick patterns such as the hammer or engulfing patterns to identify potential reversal point. All right. when you see that there is, for example, you see this guy here, he was just doing is there is nothing really going on here, guys. This very place, there's nothing really going on. All right. But at this point, you see a little push up, down. Then this guy push up again. You see this rejection. You see there is this rejection here. There is a pin bar. Then what happened? It came down, it retest, then it broke the structure low. All right. So another one is look at this guy here. It came down here. It pushed down a little. There's a very strong rejection here. Then change of character happens. There's a bullish engulfing candle. Then a retrace, boom, up. So it's like that. So all these things you look for uh, a candlestick patterns that will signify a reversal. All right, just like a shooting star. All right, a shooting star, a candle with a very long tail, with a wick. The open and the close almost the same uh, level. Okay, so it's let me just show you guys something like this. All right, you can see this is a pin bar. You can call it hammer. All right, it's a hammer or a pin bar. All right, or mostly call it a rejection candle. All right, almost all of them are. By the time you are a professional in this field, you discover that all those things, the meaning of what is really going on here is that there are buyers that are here. All right, this is a buying pressure. All right, price came down, but buyers pushed and rejected the price to this level. And at the end of the day, they continue to push higher. All right. The story behind it is that they are saying the price is too low. Now the buyers are here. They were pending orders, and apart from being pending orders, some people are still placing uh, at market. All right, as soon as price approaches this level, they lock in their orders, and with that, because buyers are now much or more than the sellers, you see price going bullish. So that is how it is, guys. Another thing is that we have candlestick patterns. All right, this candlestick pattern, specific candlestick formation. All right, like the hammer, which I've just mentioned, the shooting star, or engulfing patterns can provide entry signal. These patterns often indicate potential reversals or a continuation in the market. All right, all these engulfing candlestick patterns like this and bullish engulfing candle. All right, this candle here is longer. It has engulfed this one. It covers this one. It's longer than this very one. So we call it bullish engulfing candle. All these things signifies is a momentum, buying momentum. All right, buying momentum. All right, once you see this is you will see a very swift movement like this. You know that buyers are in the market. All right. So that is how it is, guys. Now you see this is a pin bar. All right, the pin bar just shows you that sellers pushed the price up to this point, but buyers rejected the price. And now they want to take over and push the price higher. All right. This is what we call evening star. All right. This is an evening star. You see, the trend was going up. All right. Then there's a dodgy candle, then opposite candle. This is a bearish candle. This is what? An evening star. All right, this kind of formation happens at the support level is what we call morning star. All these are reversal pattern. These are bearish reversal. Then when it happens, this one I flip it around. When it happens at the support level, it becomes bullish reversal. Let me see whether I can get anyone very close here so that I can show you guys this very guy here. All right, all these things, when you see it in a book, they'll just make it very, for it to be very beautiful and all that. But in real life, you have to use your number C's for you to code that this is what a pattern. All right, this is a pattern. This one is what we call a morning star. All right, this is a morning star and it signifies a bullish reversal. All right, once you see it form like this, you just know that okay, the trend wants to change to become bullish. So, you guys, I tell you, look at it, look at another one here. This is what we call evening star. Evening star, morning star. Here, you look at it, immediately it got to this place it formed, there was a change in trend. It got to this place, it forms again, there was a change in trend. So guys, when you how many? There are so many, so many. But if you don't know them, if you don't know it, it will be very difficult for you. Look at the formation here and price starts to roll down. So there are so many guys. How many will I go? Look at it. Price start to push up. Look at it here. It's very, very, there are so many. Anytime you see the formation here, you know that price is preparing to reverse to what? To the opposite direction. So guys, it's like that. Um, Another thing you need to understand is the news or event in trading. This strategy involves entering trade based on economic news releases or other significant events that can impact currency prices. Anytime that you have this FOMC news, all those they call it Fed, all those things. Anytime maybe the central bank of um, a country wants to maybe reduce or increase interest rate, just watch out, all right? Because at that point, people will just be waiting. As soon as the news is released, the people will just flow with the news, and you see market will react to it. All right, it's very, very important. So, guys, you know that as this thing, as I just mentioned, is very, very simple for us to understand. Another one is scaling in or out. This involves entering a position gradually rather than all at once. Traders might add to their position as the trade moves in their favor or reduce their position to lock in profit. All right. So, guys, thank you so much. Subscribe to my channel, hit the like button, share. Till I see you again. God